Hey TMFG community, Carlo Cansino here with John Iaconetti, and in today's Ask TMFG episode, John will be discussing how stocks and bonds are down both at the same time. If you do like our content, please do subscribe to our YouTube channel, give us a comment, or provide us with a like. "2022 has been a very difficult year in the market, with both stocks and bonds in negative position. John will be discussing why we shouldn't be concerned about this unique situation. John?
Perfect. Thank you, Carlo. So just like you mentioned, this year the stock market and the bond market have been negative for investors, which has made 2022 a very difficult time to be investing. I came across a very interesting infographic showing the past 45 years of data and how many times the stock market and bond markets have been positive in their correlation. So I'm going to pull it up here on the screen, and as you can see, 2022 has been a difficult year to say the least in terms of the likelihood. It appears to be an anomaly. Only two other times in the past 45 years we've had both negative stock and bond returns. 4 times the stock market has positive returns, with the bond markets being negative, seen in the upper left quadrant. 8 times we have had the negative stock markets with positive bond markets in the bottom right quadrant. But the most populous quartile is 31 times the stock market and the bond market were both positive, which is over 67% of the time. So what does this data tell us? So while 2022 has not been a good period for the stock market or the bond market, there are some signs of optimism going forward. First of all, based on our history, we're likely to get back on track where we're going to be in one of those periods where both stocks and bonds are in the positive quadrant and positive going forward. But also too, because interest rates have now gone up, expected yield to maturity or expected return on the bond portion is also going up in the future as well. So while we acknowledge this year has been difficult, we can also acknowledge that years like this are going to happen, but they are not nearly as likely as the positive markets that we will be experiencing again in the future and will continue to have in the future. So just to give you an idea or some perspective on where this year stands in terms of our history, but no reason to worry and no need to deviate from the plan. We know these years will happen, but we just need to kind of ride the waves as they come, and greener pastures are ahead.
Thanks, John. It's great that you're explaining this anomaly of stocks and bonds performing in the same direction, or at least going down at the same time. But you're right, the point of having a balanced portfolio is to minimize the risk by having some bonds or fixed income to minimize the volatility of the equity market. I think what we take away from this is, regardless of what's happening in the world and this unique situation, you stay invested, you don't make knee-jerk reactions. That's our episode for today. Again, if you do like our content, please do subscribe to the YouTube channel, provide us with some feedback, a comment, tell us how we're doing, or give us a like. Until next time, I'm Carlo Cansino.
I'm John Iaconetti.
And this has been Ask TMFG.